About to start this back testing session using FX Replay. Been playing with this website for a couple weeks now, and that's like 10x my back testing. And so I wanted to try something. I wanted the back test called DMFS. What it stands for is the draw on liquidity, um, market structure shift, fair value gap, and then a swing low or swing high gets put in. And I'm trying to do, you'll see in the charts, but a pretty good risk to reward, like a minimum of 3 to 1 risk to reward, or 2.5, 3 to 1. I'll show you what that looks like, but the stops are super tight, like 2 points. And so about the back test this, I'll show you how to start up a back test. Yeah, FX Replay has been really great. Newer company, so they're still working out some kinks, I think, but yeah, I have nothing good things to say about them. So I'm going to create a session here, and I'm going to start with a $50,000 account balance. I use Apex Trader Funding. Link in the comments if you want a discount. And I usually go for the $50,000 account. So the pair I'm going to be trading is US or the S&P 500. A nice pick, a random start date. So I'm going to do probably 2020. I could try late 2020. Where's that? Let's say September. I can do, we'll start on a Monday. And then we're going to do 2 months of trades. So the time, I'm going to start in the morning on Monday. Let's just set it at 7:30 a.m. Yeah, okay. And the strategy is going to be draw liquidity, a market structure shift, fair value gap, and a swing high or swing low formed within the fair value gap. I usually give this a number 1 because I might want to do multiple sessions and then name it something else. Like maybe with one of them I'll risk 1%, another one I'll risk more. That's the kind of criteria I put here. Like you can see in these other ones. This one had multiple trades in the day. One I'll stick to a rule where I do 1 trade per day. For this one, I want to stick to a rule where I don't trade until 9:50 until 11 o'clock. And then I might trade again at 3 o'clock. Kind of want to see on how many opportunities show up during those times in the back testing. So there it is. This is my thing. And then at the end, I kind of want to show you what it looks like. I have a few of these done. You could see this was a pretty low win rate, but it still ended up doing pretty good after about 210 days of back testing. So that's the silver bullet strategy ICT teaches. That happens pretty much, forms every day. So we can go into that a different back testing session. But I wanted to try with this. This one I kind of discovered on my own. And I can explain to you how once we get the charts. But let me show you what this looks like for like this one. So if I go to silver bullets and Q, I can look at the analytics for this backtesting session. And you can go all days or you can filter by day. So this one wasn't bad. It was a little, it's like a month and a half worth of trading. Well, actually, this is a month and a week, right? And it was about 17% gain. Some of those days were huge. Like this one, I think it was like a $3,000 trade right there towards the end, and then I kind of stopped backtesting it because I was getting some consecutive drawdowns. And the problem with this was I should really stop trading once I hit 1 or 2 losses per day, but I kept on going until I kind of made it back. So yeah, this one was a little messed up and a little skewed. You could see the equity curve was kind of jacked up. So that's something else you'll learn as you have really good sessions and you maybe have a loss that you just wait for the next trade opportunity the next day, and you can see a more steady equity curve rather than this kind of jagged one, which I don't really like. Trying to get better at. Yeah, with the daily filters, I could see that maybe I avoid Mondays, which is typically what I do, but I decided to backtest them to see if I get more data on that. And you could see Tuesdays weren't bad. Wednesdays are kind of hit or miss, actually not very good. Thursdays were not very good, and Fridays I think were awesome. So a 67% win rate. I maybe just had one or two losses on that on the day, and I think these were two losses on the same day. So there's that. Um, and then they give you some more information like your average risk to reward for all your trades, and then the max risk to reward that you used. And then your ideal average is I think they take the equity you could have achieved before the price reversed on you, which is I don't know any other backtesting software that does this, which is pretty cool. So the max one was there at one trade I could have had a 27.84 risk to reward before it reversed on me and stopped me out. Um, and but this is nice. This ideal average means that maybe I can bump up my average risk to reward by like maybe you know half half a percent or something like that. And then this is a nice statistic. It's could have been profit or break even. And what it says is if when it's in 1.5 R, if you move your stop to profitable break even, I could have saved two trades in this case. And out of 21 trades, that's 10% of my trades basically. Oh wait, so 37, about 1% of my trades or less, I could have, So that one's not that. That's a pretty good number. If it's a higher number, you know that you should maybe move your stop to break even or take profit. And this is a nice little graph, some more data. And so let me go back into the dashboard and we'll look at that data once we get done with the back testing. So let me go ahead and do this. So we have open and closed positions. I just usually leave it on closed. Minimize this. Looks like it's taking a second to load. Okay. So this is, if you're familiar with TradingView, exact same setup. You can have your little drawing tools favorited. This is my chart background, what I like. It's a little easier in my eyes at my age. And then what I like to do is make sure this is toggled, and this synchronizes the speed of the candles painting in the backtest mode with your time frame. So right now, when I switch to the 15-minute, you'll see this switch to 15-minute. And then I like doing this all the way up just to get really quick results. And so now to start off with, I have this strategy really doesn't have any bias. It just looks on short-term draws and liquidity, aiming for about 5 points in the ES every session you trade. So if you trade, well, not session, but I guess I always trade the New York session, but I split it up into different parts of the day, as ICT discusses in his teachings. And so I like the 9:50 to 11 o'clock, and then I like lunch hour, and then I like the 3 o'clock time frame. So I'm gonna have to see how many opportunities present themselves in each one of those. I may eventually do separate back testing for all of them, but I'm just gonna kind of see how it goes and maybe take some notes on this. So the first thing I want to do is fast forward here. So I could step forward here, and you can see there's a time right here. I have it set it to New York time, and it tells you what time that we're currently on, which is a lot nicer than TradingView's backtesting. I like this feature. So we're at 9:14. I want to go to about 9:45, switch to the 5-minute, jump to 9:50. And here we're going to look for opportunities. So first, before we look for opportunities, I'm going to look for an obvious draw in liquidity and see if price gives me market structure shift and sees if it's trying to draw towards that liquidity. So what we had occur at 8:30, which is open outcry, is we had, we have an overall trending market on the upside since about 2:35 a.m. And then we have a nice little structure break or a liquidity sweep, I guess a liquidity purge, as ICT calls it. And then we went up, and it looks like we already attacked these highs. So we're heading into this, it looks like it'll be a higher time frame order block as a draw liquidity, and possibly this high up here. Let's go to a higher time frame actually and see what else we can see. So yeah, see this downward trend here, or this spike down, broke some structure on the lower time frame here, and I consider this point here as a draw in liquidity, as a bearish order block and a point of resistance that price will want to retrace into and kind of test. Oops, I want to go to the 5 minute or maybe a higher time frame and see what else we could see. So that seems like an obvious draw in liquidity. We have a pretty balanced price range here where there's not any real gaps in price. So that seems like efficient delivery. And on this overall 1 hour chart, seems like we got a bearish context. So even though we have a bearish context, I think I'm going to get a bullish draw in liquidity in the short term. We are on a Monday. So Mondays, even if you have a downward trend, usually how it works is Monday and Tuesday would form the high of the week. And then we'd get a nice, if my weekly bias is bearish, Monday and Tuesday might be bullish for me. So I think that's the case here. Could be completely wrong, but okay. So now we're on the 1 minute. I want to get to at least 950. Don't like to trade before that. And then I kind of want to see price. So we see these order blocks, they're being respected. And then we did have a sweep liquidity here. So as long as we don't have a market structure shift to the downside, I'm gonna have my draw liquidity up here. And so part of the strategy, which you see if one will form, is where we're gonna wait for a market structure shift towards our draw liquidity, which I should mark out also. Let's see, we had 930 open. So this could be a draw as well, these lows. And if we consider this here to be a liquidity sweep on the shorter time frame, then the swing low that created that would be this low. So if this breaks here, I'm going to consider these lows as a draw in liquidity. And it breaks sort of with displacement, not really, but we're going to consider this a viable trade, okay? And so the idea is that this swing low got broken, and now we have a change of character on the downside with a clear draw in liquidity of these 3 lows. Usually if you have more than one target, like three major swing point targets, like we go to the 15, it's a solid draw in liquidity because it gives you 3 targets. And ICT always talks about paying yourself with partials. And so with this strategy, I'm not concerned with partials. It's going to be a single shot type trade. So it's going to be in and out, but the risk to reward should be 1 to 3. And what I want to see is I have a fair value gap right here. So this is viable for us. And let me just put a gap here, change the color a little bit. So the idea is that, and this is how I discovered this strategy, was that a lot of times as somebody new to ICT, I would see price fill me here. I'd have a limit order, and then it would come down and work in my favor. And then I was so nervous that I moved my stop to my entry, just above my entry, right? I'm like, okay, this can be a risk-free trade. This is the perfect setup. And then price would come back up, just touch it, or maybe go like a half a point and then really rip down. That must have happened to me way too many times that I thought to myself, well, why not have a strategy where you anticipate this double top within the fair value gap to form, and you have a really tight risk. Your risk is just really tight right here, because that's what happens so many times. And then how many times would this work out in my favor, where I could have like a 1 or 2 point stop, but I have a 5 or 6 point, or I could aim for the swing low, sometimes 7 point profit target. And so that's what the strategy is about. And again, this is kind of speculative because I have traded this system for a little while, and then it not present itself as frequent for a period of time, but I haven't truly back tested it and analyzed the statistics. So that's what I'm doing here live with you guys, and you kind of see my thought process going through this. So What I want to see is a swing high form. I'm not going to do an entry. Once a swing high forms in this fair value gap, if it does, I will put an entry at that high and then have like a really tight stop. So let's see if that happens. Okay, now I have a swing high forming the fair value gap. And it can form a little bit outside, like it's going into this order block, which is fine. But I kind of want to see price go down at this point. And then it's formed a swing high here. It's been very slight. There are some equal highs here, but this is the idea, is that, great, now it formed swing high right here. My entry would be right here. Stop would be, oh wait, I picked the wrong tool. I think they're out of order. Here, short position. And this backtesting software is so cool. Like, I'll show you how the order entries work. So take profit's going to be, we're going to do 500 ticks. In this case, it's got, you know, 4x type numbers where it's like pips. And we have a 2 point, so it's 2 point stop, 5 point target. And we're going to set a limit order right there. So with this, what's really nice about this backtesting software is that you can place your order, and then it uses the graphics to assume your order entry, stop, and take profit. And I'm going to do just 0.5% because that's realistic of what I'll be doing in my account. I have 4 funded accounts with Apex, and I want to try this strategy. I want to try to pick a strategy that's you know, pretty good for that. So here we go. I'm going to save that. I'm going to hit forward. We get filled. And we get stopped out. So that wasn't good, but now we have another market structure shift and maybe a draw on liquidity to the upside. So there we got a fair value gap. I'm not going to draw all of them because I kind of want to move quickly. That's okay if we took a loss. So now we want to see this price come down into our fair value gap and create a swing low, which it sort of did there, but it's a really big gap, so I'm gonna allow it. Okay, so that's good enough for me to enter a long position with a stop of two points. And take profit of, let's see what 500 looks like. Okay, in this case, I'd leave it like that. Okay, so let's see if we get filled. Place order. 0.5% risk. And you can see my P&L down here. I don't know why it stopped me out. Maybe it, because I only risked, I only risked 0.5%. Okay. Oh, did I put market? That's what I did wrong. I messed up. I think I'm going to take profit anyway, but let's see if it, okay, so that one worked out. And you can see if I expand this, it shows me my P&L and risk to reward. So would that one have worked out? What was this low? My entry was 34, 32, 36. This low, I don't think I would have entered on that one. So I accidentally hit market on my order. So anyway, so that session was overall successful. Let's go and see what the lunch hour brings. So I can hit play here, fast forward. This is really nice. So we're going to wait till 12 o'clock. And the idea here is that if we have a trending day, you can see a little bit of a reverse trend at the 12 o'clock. Where's the 12 o'clock right here? And so if we see a sweep of liquidity at 12, probably see a nice downward trend and a draw on liquidity towards these lows. So let's see if we get something like that. So we want to see a market structure shift. That we actually want to see it clear this low because that was the highest point at this point. So I want to see a change of character more than just a market structure shift. Like we could account this one as well, but I don't like those. I want to see a change of character. So actually this high was that. So right here, if we clear this low, which we did. We purged that. So now I want to see, we have a fair value gap here. This wasn't really with displacement. Um, Now we have a swing high. So what we do here, it did kind of displace that. We would take a short position on this swing high, and then looks like we would be wrong right about here. Let me just make that always 2. I'm making it always 2 points, and I'm trying to make this always 5. So we could be targeting this liquidity down here or down here. There's some equal lows. We could extend this, but I'm going to try to leave it exactly 2.5 R. See how that works out. Now we'll place order the correct way, which is not market, but limit, right? And we're risking 0.5%, $250. Now let's see if we get filled. Okay, we get tapped into and stopped out. Okay, so that didn't work. We're at the towards the tail end of the lunch hour. It looks like we did have a downward trend, but it just kind of reversed right before 1 o'clock. So now we're gonna wait till 3 o'clock. Hit the play button. Oh wait, was this a holiday? September 20th. Must have been a holiday. Market closed early. Okay, so we'll just go to 15-minute and fast forward to the next day. Let me remove this drawings. Oh, another thing we can draw in. Let me rewind into Friday and draw the new week opening gap, if you're familiar with that. If not, look for it. ICT's trainings, I'm not going to explain it. It's basically the gap between Friday and Sunday's. Friday's closing, Sunday's open. Where's that guy? Sunday, okay, here we go. Sunday. So right here, we have a very small gap. Does a 5-minute work? So that's how I draw them. Let me go to the 1 minute, see if that is correct. Okay, 6 o'clock here. Okay, so we got close. It's even smaller. Yes, new week opening gap. Basically, price reacts a lot off this new week opening gap, as you can see. If I go to the 15-minute, see that if you have more of these drawn, you can see the relationship between them. They kind of act like magnets, especially when they break through. You can see it retest the new week opening gap, and then there's probably one like over here that is being drawn too. So those are great to pay attention to. Okay, so let's go to Tuesday. Right, we're on Tuesday. Still on Monday at night. Gonna go to about 6 a.m. and hit pause. Okay, we're at 8:14. Okay, 9:50. Okay, great. So let's see any obvious draws in liquidity. Big downward trend after 4 o'clock. 8:30. We had a sweep liquidity on the upside and clear move down. So let's go to 15. We just purged this buy side. And we have some more targets down here that are likely to be a draw on liquidity. So let's see in a minute if we don't run into those really quickly. Let's see. We might see a sweep of the swing high and then the this could be like a breaker type setup to the downside. So it might induce some longs here that want to catch that move. Yep, stop them out really quick. And might get the real move. So we kind of want to see price break this low. It broke the low. There's no fair value gap in play. Stop out some more people. Yeah, I'd consider that a change of character. There's a fair value gap. We have a spike into it, and we're going to try going short. It's going to be a very tight stop. But we'll try doing 2 points anyway. We're trying to stick to, oh wow. Yeah, try to stick to tight stop. How is that possible? What is this? Is that right? 500 or 5,000? Yeah, that's right. Wow. Well, this was 2020, so I guess I wasn't trading futures back then. I was trading stocks. Maybe it was just this volatile. Not sure. Seems a little ridiculous. Let's go ahead and place our order. No, I'm sorry. I wanted to stick to my rules. All right, I stopped out. We could enter in this as well. Get a swing high. This might be the stupidest strategy ever. I don't know. But you got to give it some testing data. I don't know what this day was. It could have been a news day. But these ranges seem a little ridiculous. Did we get stopped out? We did by a tick. I guess we would have got, oh man, that would have been a nice trade. Okay, well, that was 2 losses in 1 session, so let's just wait till lunch. What's this? This should be 6 points. Yeah, 600. Okay, maybe stops are just being too tight. Pause the stream. Hold on, I'll be right back. Okay, I'm back. Sorry about that. All right. So we got a swing high here. Let's just try something like this. All right, stopped out again. Let's go to the 3 o'clock session. guess 3 o'clock rolled around. We're sweeping the top really close to buy side. Breaking structure here. Could take an OTE entry or something in premium. If it doesn't hit, okay, so like right there would be great. Short position. Oh, actually, I want to wait for swing high to form, and then which just did, and then over there. It seems like we tend to sweep liquidity more than once, like internal range liquidity. That's usually a pretty good bet. You miss more opportunities, but you can keep your stops really tight. Like we might miss this altogether. Okay, so we get tagged. Almost get stopped out. Get stopped out. I never placed an order. Oh shit. Well, I guess that worked out. But we swept this liquidity. Okay, so you could also do stuff like market orders. So they place an order, I could do a market, which is really cool. Oh, I think I have to draw a new one. Might speed my take profit. I'll just do these equal lows. 4. There we go. Okay, so as soon as I hit the next button, it'll be in the trade. And gap down, I guess, in the close. That's not realistic with the prop firms. I wasn't paying attention to that, but we'll just take that as a win. Underfib truly capped down. I don't think it can cap down like that. Oh, new day opening gap. Yeah, it's a new day opening gap. Okay. So let's go. Actually, I'm kind of sick of this strategy. I don't think this works. Part of finding your own strategies is you think they're going to work out, but sometimes it's better just to follow somebody who's gone through all the testing, and then you could just kind of refine it to make it your own. And also, you want to back test it just to prove that it works and see what drawdown looks like. Like, let's say you have a 65% win rate. You could backtest a whole year's worth of data and you find that there are scenarios where you're going to have 8 losing trades in a row. But going backtesting and going through that, you have the kind of the knowledge of how to handle that drawdown and just be confident that your system will eventually kick back in, which I've found in ICT Silver Bullet. It's really nice. Go back to that. And I think I'm going to create a new strategy using that. So I have a silver bullet. My win rate is pretty low because it's a mix of several different sessions. So I'm going to use it with the ES on this session. 50,000 balance. S&P 500. A start date. Let's try 2021. And I don't know. Let's see how it works in the summer. So I want to see how it starts in May into, well, let's go June to August, right? So June, say 7th at, start it at 8 a.m. And let's do, you could do 1 month is June, July, August. We'll do it by a couple weeks to 27th, and then we'll just choose silver bullet strategy, ICT, and I'm just going to call it. Let's see, I have 2 of them. So I'm going to call this number 3. And this is going to be risking 0.5% cumulative. So as my balance grows, it's going to grow the amount of risk per trade. And then this is going to be 2 trades per session. Max 2 trades. That's going to be the rules. So I'm putting rules in the name, and then I might do another one, use the same rules, but it'll be a different time frame. This is not bad. Oh, let's see. Somebody messaged me. I didn't see the messages. Sorry, guys. So let's see. Oh, there's no. Okay, did I buy the ICT program? There's nothing to buy. It's all free. And if somebody is trying to sell you something, ICT, they're reselling free stuff. Now, people may say that they've learned ICT and then try to sell you mentorship or maybe something they discovered within ICT's system or smart money concepts in general. I post that. And then somebody else asked me another question. I'll get to that in a second. But yeah, I never bought anything ICT. I was thinking about buying some mentorship from people that are successful, but just haven't gotten around to that yet. I feel like I'm progressing pretty well. Not there yet, but just trying to see how much I can accomplish on my own, and then maybe reach out. And then somebody else is asking, did I have an indicator for InterTrader? No, I don't. So no, I don't. Thing that you'll find after you start trading for a while, I found a great indicator strategy and it worked for a long time and then just stopped working. It stopped being so effective. I think a lot of that was limited to how much I could backtest it. And then not really identify or understanding market structure enough and the true nature of the market that an indicator, I think some indicators work in certain market conditions and they don't work in others. But those conditions are based on market structure. So you really have to understand market structure first before you apply any kind of indicator because you'll have to make tweaks to it depending on the market structure. I'm convinced that there is no indicator that's going to work all the time in all market situations. Maybe there's one out there, some kind of magic indicator, but that's what I tried finding, and I've recognized that there's different market regimes that happen pretty much consistently throughout the year. And this I learned through ICT is that there's seasons to the market, and they usually do certain things around certain times of the year. And then you have different market conditions, like we're about to enter a recession, what's happening with the Fed, and understanding that. And there's just a lot to it. There's a lot more to understanding the market than some indicator can tell you. You also have to have other confluences, like look at the other indexes, such as the NQ and the Dow, and also look at the Dixie or the dollar. So that stuff you can't do in the backtesting software, but I do look at all that stuff when I'm trading. Or right now I'm paper trading. I'm not trading with live funds, although I have 4 funded Apex accounts. I just haven't started trading them yet. So trying to refine my system a little bit before I go and do that. And I've seen a lot of videos on ICT silver bullet strategy, and I really like it because it constrains you to an hour of the day. So I'll explain it to you guys in a couple of trades once we get going. So we're starting out a new session, and so let me set this to fast. And then we're at 9 o'clock. So the idea is that between 10 and 11, we'll get a setup that occurs almost, well, according to him, every single day. And according to people who have shot, videos, it's every single day that you see a setup occur in Forex and in, futures. So what you want to map out right at 10 o'clock, I come to the charts maybe 10 minutes before that, but it makes for a nice short trading day, is mark out your swing high and swing lows. So really easy. Swing low is, 3 consecutive candles where there's or 3 candles where there's a low point, or 3 candles where there's a high point. So there has to be a high or a low. That's a swing, basically, basic stuff, right? Basic market structure. And then we're going to zoom into the 1 minute, and we're going to mark out some more swing highs. They're nearby. You don't really need any daily bias in this case because this has happened after the 9:30 open. We kind of have a clear direction, but usually during this times, according to ICT and to a lot of people's backtesting, a lot of consistency with different YouTubers saying that 65% win rate. And I experienced that too for some of my backtesting sessions that I've used the software for. However, I've messed them up by over trading for the day or having psychology be a factor, even in my backtesting. So it's something I'm dealing with. But anyway, I digress. So we have a swing low here. I do tend to look at the overall structure of the market too, just to kind of help me figure out where we're at. But I'm going to try not doing it for this session and see if I can do it purely in this time frame. So the idea is after 10 o'clock. So this doesn't count really because right at 10 o'clock we purge some liquidity, the swing low. So once we form a swing low, now we want to consider that if price swings this, sweeps this again, and we get a market structure shift, we want to be bullish. So really, we're range bound right now. We consider this also a swing point. So the first one that is taken here, I'm going to be on the opposing side, but not right away. So we get a swing there. Now these 2 swing points, and what I like seeing is 2 swings taken out. So this is kind of perfect. If we see a swing, if we see price break this with displacement, we're going to enter in a fair value gap. Or we can see price trending down for a little bit. We have till 11 o'clock. And then why did I draw this out? Oh, there's a swing point we could take out here too before we reverse. And look at this overall trend in the 15-minute. We're kind of bullish, right? We have this pullback. It seems kind of natural. I think we might even go to here before we start to shift on the other side. We have a lot of imbalances here too. So it may reach for more, be completely wrong. But here we have a low taken out here, and then we could get a market structure shift, but I kind of want to see this one taken out before I'm confident it'll work. Now maybe we get no trade. I found that Mondays are kind of hard to trade with the system. So you get a swing low put in. I consider probably breaking this high with displacement viable trade. And we're getting close to 11 o'clock. We'll take it up to 11 o'clock hour. So we get a sweep. It's not really with displacement. We have 4 minutes left. Could enter here. I think it's pretty low probability, but we're going to take it anyway because I kind of want to see how this plays out. And so we'd aim for this opposing liquidity. Actually, I'd like to do more than one hour, like 2 hours perfect. So let's just see how that goes. We'll place an order. It'll be a market order. We'll just mark it right in. And at 1.5 hour, I will move my stop to break even. So I'm going to go ahead and work that out right now. Getting really close to break even, moving into break even. Ooh. think we get stopped out there, didn't we? Okay. Oh, so close. All right. Not a problem. That maybe could have worked out if our target was this swing low, right? But I didn't like the 1 to 2, so I was willing to risk more. If you did, I'm sorry, the 1.2R, but if you did do that, which is kind of part of the strategy, this would have worked out, was that, you kind of aim for the lowest point of liquidity. If you're taking more contracts, which I don't think you could take partials with the backtesting software. I'm sorry, I think you can. However, I don't know how. So I'm taking up to 2 trades per session, but this is over, right? It's 10 to 11. I'm going to go ahead and erase all my drawings, switch to the 15, and then let's fast forward to Tuesday. One thing I will do on Tuesdays is form a bias around the Tuesday. There's, I think, a 65 or 70% chance that it forms the lower high of the week. So if that's clear, I'll also use that bias. Okay, there we go, straight dump after market open. So we're at 10 o'clock. Let's mark out some of our swing highs and swing lows. So this is a nice sweep of liquidity, and then it reversed. So if I were to actually, I kind of want to see this. It was Monday's trading. Let's go to the 5-minute, make it easier. So we stopped trading at 11, and we saw a sweep liquidity, and then a reversal at 2 o'clock. We had another sweep liquidity, and then look at this. I mean, this is just until market close. Huge push up. Continue to push up to clear this liquidity. That's crazy. Okay, so swing highs, swing lows. This is a pretty strong area of resistance. We might tap into this right here. I think I'm going to change the color here to blue. Oops. Fill. I'm going to save that guy as block. I think that'll be a draw of liquidity down here, this imbalance. We have a swing low here, but let's fast forward to 10 a.m. So that's 10. There's a swing low being put in. We swept this swing high, which is the nearest swing high. So, and it's after 10. So I am now bullish. But we do need a market structure shift. Unfortunately, we just can't enter off of that. So price may reach higher here the whole time. We'll see. Okay, so there we get really nice displacement. You could market order in or stop order in off of that, but it's kind of hard to tell. Sometimes it wicks and it's not with displacement. So we're going to see a gap. And now right off of that gap, we're going to enter a short position. I'm going to target this liquidity. Put a stop right here. I could probably do a little better than that because we have some equal highs here. That's 1.7. That's not bad. So I'll place a limit order here, targeting this equal lows. We see if there's anything else. No, I think this is a nice draw on liquidity. This makes sense. Order's placed. Let's fast forward this. We get tapped. And at 1.5, I'll just let this run. Okay, that did not work. So that's 2 losses. It's not 11 o'clock yet. I still think this thing is bearish, but it doesn't have enough time to. Is that a market structure shift? Kind of is. It's like a mini one. There's a gap there too. Got displacement. So let's try again. We can aim for this lower one. That's 3.6 to 1. That's pretty nice. Place order. And we get stopped out. Damn. And that one works out. So pretty, this is a breaker, come back down. So more displacement. I didn't want to take a third trade because it was after 11. But yeah, that one was really close. So that's 2 days of losses, 4 losses in a row. Or 3. I only took 1 trade. Yeah. Oh, yeah. Okay. I know what happened. We did tap into this order block. I'm kind of curious to see how this works for the rest of the session. Oh, so we purged that. Okay, so that was not resistance at all. We are drawing into a lot of this imbalance down here. So let's see how that price plays out for the rest of the day. So nice reversal here at 11:15. So after we cleared this liquidity, let's put a box around this. So we cleared that liquidity, we get a market structure shift and a fair value gap. It doesn't come to the lower one, but it fills the first one and then kind of rockets up the rest of the day. Just observing price, kind of taking mental notes of stuff. All right, going to 10 a.m. All right, some nice equal highs here. Oops, this guy. So mark that one out, mark this one out, and maybe these two. It's 10 o'clock right there. So there's a swing high here. And this is not very significant. I'd count the 15 as more significant, but depends on if we see a market structure shift after that in the opposing direction. So, okay, so you see a nice little, so that's nice because this is a sweep of, or a purge of liquidity when it doesn't continue on like that. And then we could get immediate displacement. Yeah, so this would have been a perfect entry. I'm going to go ahead and market order into that, targeting these equal highs, not this one. So kind of missed that one. We're chasing price a little bit, but I'm not going to aim for this low. I'm going to aim for this, and it's almost 2 to 1. So that's satisfactory for me. Do market order. Let's see how this goes. So we sweep that. I would not want to see it come back. So I'm going to go ahead and move it break even. After 11, let's get a nice run in price. Oh, okay, break even. That was a risk-free trade, but let's see, was that was 1 to 1, and what we should have done is entered on this pullback, and that would have been nice 2.38 to 1. So that was my bad. Kind of missed that, identifying that. And I did find this in other backtesting sessions was, yeah, you will get a string of losers. In this case, I kind of read the market wrong in a situation or two. But once you get a little bit of that experience, you'll increase your win rate. And then after those string of losers are gone, you'll see a string of winners. So it's something that when you hear 65% win rate, you don't realize that that kind of stuff occurs, right? You just assume it's gonna like flip a coin and you're gonna get this even distribution of 65%. But through backtesting, you really find that you get 8 9 losers in a row, but you might get 8 or 9 winners in a row. So that's one of the benefits of backtesting. Oh, did I go too far? No. Oh, what is this? Thursday must be FOMOC or something like that. No, FOMOC's at 2. Oh, let's take this strategy. It's supposed to work on news days as well. So we purge, swing high. We sweep liquidity, fair value gap. Tap into that order. So let me go short here. Stop of the highs. It's 1.43. I think we'll fill this gap, 1.7. Let's hit play. Ooh, that play button's becoming good luck. I do that. Boom. Finally. What was that? All right. About 1.6R. And clearly, you know what's interesting is that this is a breaker here. This is the only breaker. And it was this is a nice draw liquidity. You notice usually the midpoint is a point of reversal. So this breaker, if it comes down to, let's say, where's the midpoint? Right about here. That would have been a great target too. Yeah, right around the midpoint. You see it reverses right off of it. In fact, the midpoint exactly would be this, yeah, this 50%. So it touched. Look at that. That's precision, man. Here, these down close candles act as a block, an order block themselves. So you have a kind of a nested order block. Maybe if we zoom out to the 5-minute, we'd see it more clear. It's the midpoint of that body. But in a minute, it's pretty clear that this whole thing is an order block. I just reversed right off of that at. So yeah, 11 o'clock, there's another macro that runs and pushes price up, I believe. Or it was, no, it ends at 11, right? So we had this thing start at, usually it's initiated by 10:50. Between 10:50 and 10:10, you'll have the start of a reversal, right? And that's what happened here. It was right after that we had our entry. And we probably could have just waited for a pullback into this fair value gap as an entry by market ordered in. Another thing you could do is just market order on this break, which would have been a nice 2.61. So that's it for the day. I have a winner, so I'm going to go ahead. And I don't think so. Do I take another trade? No, it's after 11. That's it. Day's over. m. Swing low here. Swing high here. We tap and swing high. We get a market structure shift and fair value gap right there. So go ahead, place order. I'm going to stop because it's only 3 points. Let's zoom out and see if we get some out of liquidity. Oh, we got some nice relative equal lows here. Maybe we could tighten up our stop, or we can. I mean, we're bullish, right? Overall, we're trending bullish. 1 hour and the 4 hour. So this could be really, yeah. Yeah, here's a bullish or bear, a bullish order block here. This is also one because this could be a point of reversal. But let's see if we purge this liquidity, so price shouldn't come back up there. And I've seen other people, they've put their stop sometimes even here at the candle that forms a fair value gap. Usually it has to also form the structure shift. So I'm going to go ahead and go with this candle, make it almost 2 to 1. Let's see how that plays out. I do limit order. Get tapped in. And boom. All right, now we're profitable. That was another almost 2 to 1. Great. Okay, that worked out. Let's see how low price goes. How low can it go? So, oh, some other, no, this is the relative equal lows that I targeted. And then there's some more here, at least on the 1 minute. That price went to. And there's some more here and this low. Another low back here. 2 to 1's pretty good. I just don't like have such a tight stop. 1.5 points. Well, there's no more opportunities that I saw before 11. Yeah, I'm trying to look for some. This is kind of a very small fair value gap that would have worked out. But being so bullish in the higher time frames, I didn't feel comfortable doing that. We're on Friday. All right. Switch to the 15. I'm going to start drawing in the new week opening gaps as well. So let's go to 6 p.m. or is it 4:30? Okay, so it's the new week opening gap. We closed here, we opened here. I'm just going to zoom in. I have a template for that. It just extends in time. So I like using these, they're great extra points of data. If you're not familiar, just search for new week opening gap with ICT. Highly recommended. You'll learn about those. Did I miss a day? Oh, I totally missed Monday. Whoops. Oh boy. Am I in the 15-minute? Oh, geez. Well, now I'm gonna look back and see if that would have worked out. Hindsight, right? So we got 10 o'clock here, 11 o'clock. So we had swing low form, get swept, market structure shift, we would have had an entry here, the stop below this low, and then we would have targeted opposing liquidity. Probably, yeah, we got stopped out. So Mondays, again, not too, usually not kind of sideways days a lot of times. Okay. So what time are we at? We're at 8:15. Let's go to 10 a.m. See how we get a nice tap into that and we go up again. Probably, that'll probably be support in this case. So let's see. That's my guess. Let's see if we get tapped into the low again. If so, we are bullish. Okay, we're bullish. So we got to wait for a structure shift. And I would consider this to be viable. You could even, I could try putting in a stop order. See what price does here. So that was with displacement. We had a swing low here that, or swing high that initiated the downward move on that. Let's see if there's any higher time frame lows that we could tap into. See any. So I would market order this because I think there's a lot of upside. This. So if you market ordered in there, we would attack this liquidity for 1.6. These seem to work out best for me. There's also a volume imbalance here we can aim for, or this downward move. Price likely would come up to here. If you think anybody that was long at this point got slaughtered. And if price were to come back up here, it's just going to turn around again. So I'm going to go ahead and place this one. I like it. I feel good about it. Oh, okay. Well, we could take another trade if we see another market structure shift. It's got to be after before 11 though. No, didn't happen. Does it eventually happen? There's sometimes a 3 o'clock run, which on days like this I like seeing happen. Tuesday. If we look at the daily, on this basically upward trend, the Tuesday could form the low of the day, so we could see actually price attack previous day lows before we have a bullish week. Just kind of curious about that. Because price is at 45, the lows at 33, so we're not too far away. But now we get all right, so just observing here because I want to backtest also the 3 o'clock macro. So we get some lows put in before 3 and some highs. So at 3 o'clock, which one does it take out first? Takes out the lows, right? Now we want to see a market structure shift to the upside, which we have here. So around here, I'd go long, targeting opposing liquidity, and we get stopped out. So again, I got to work on that. But look at this, 336. It's a crazy price movement. Okay, that's enough of that. What are we coming up on? Over an hour. Backtesting. Price 10 a.m. We're kind of hovering within this new week opening gap, which indicates a choppy market. Keep bouncing around in here. Why is the volume so low? Is this some kind of holiday? June 21st, or it's June 16th. I'm gonna look that up. Huh. Maybe it's the backtesting software. Okay, so we have lows, highs. Let's see which one gets broken first. Highs get broken, so we're looking for sweep or market structure shift. 411. Okay, so we'd have an entry there. We had a market structure shift, fair value gap. We'd enter in the fair value gap. So market order in there, stop up here. And nearest posing liquidity is about 1.2 R. Let's see if there's anything else. There's some nice targets here. Let's extend. It's 1.5. It's 1.76. And then this one kind of equal lows. Let's see. That's a lower low. Okay. Place order. Markets. Okay, stopped out. So 10 o'clock. This high. Maybe that's my mistake. Swept highs on the top side first. Yeah, no, I was bearish. Yeah, I don't know. Keep trying. We have expanding range here, what's called like a breaker block right here. So what I want to see is a clear indication what side it breaks first with displacement. And then I want to take that side. So kind of going opposite to the recommended strategy. So I want to see displacement on one side. So that's exactly what happened. Like we took liquidity on one side again, and then we came back down here and we did another thing where we cleared both sides of liquidity. We just did that again. So we have to form. In this case, we formed a fair value gap, and that could have been a valid entry, but there's no real point of interest taken. But in this case, it happened after 10 o'clock, which is significant. The time of day is significant. So let's see if we get an entry into any one of these fair value gaps. So we do there. Stop would be a little ridiculous. I'd say I want to stay in premium, in this case up here, so at least the entry into this fair value gap. So let's try that with a stop, I would say up here, and we could target, this is 1.93, that's a nice target. Let's see if we get filled. Let's hit play. get tapped in, stopped out. What am I reading wrong? This shit. This is not working out in this session. Fuck. So we get a high put in. I guess we swept the low side first, but we had no entry here. Oh, we had a fair value gap, but no market structure shift. So I'm not too sure where you would have entered there. Fuck. Trading sucks. But I love it. Okay. Eight a.m. Let's fast forward to 10. Let's focus here. I think we need to do is enter in our daily bias too. I'm not, well, that's the thing with this session is that I want to see if I don't need that because that's the claim. So you don't have to look at the higher time frame, but I have done, let's say, a session with the NQ where I did much better by looking at the daily, having a daily bias and kind of idea where price was going to go, especially if in the morning session it was counter to where I wanted to go. Then after 10 o'clock, it really unfolded. So a lot of my problem I was having with losing trades was trading right at the open or within the first half hour. Just fake me out like twice and then I'd be done for the day and then the move would finally unfold. That's why I like this after 10 o'clock type setup. But the criteria, either I'm not understanding it or it's just, maybe it's just one of those things where the strategy works, but it's got a higher risk to reward. It's got almost 1.6, 1.98. This one would have been 1.5, but I close to it, but I moved it to break even. But yeah, a string of losers. So let's just stick with it without the daily bias. I want to see how it does. So we got a swing low here. We have a swing high here, but yeah, so in this case, we broke the swing low that happened prior to 10 o'clock. So it would be bullish in this scenario, which seems crazy. I gotta look out a little bit. I'm just curious. I mean, we are sweeping other points of liquidity. It's just that this seems like is where we want to head, right? Stop those people out. But let's see what happens. I kind of want to see if we sweep the highs and not enter on this. Strategy is saying do we sweep any liquidity? Yeah, we swept that and we swept that. So, okay. All right. We didn't have a market structure shift though. So no, we can't take that. Now we had a market structure shift. But I want a fair value gap to happen after that market structure shift. Just be patient and see where this leads. So another liquidity purge. Another one. There we go. That is displacement. 3 swing highs taken out. Clear 1, 2, 3, 4, 5, 6 green candles, which happened here as well, but there was no market structure shift. It just filled this imbalance and headed back down. So combine those two things, you have really high probability. But where do you put your stop? You want to put it way down here and then, take out this liquidity? You could. Let's see what that, I mean, we could have marketed in right there, but I want to see a little bit of a pullback, fair value gap and a pullback. So typically I want to see pull back into this fair value gap, then it go. But sometimes these things just run away from you. So it really depends on your risk to reward. So if we go long position, let's just check this out, right? I'd say this low, I would want to see price come down there. I know I'd be wrong at that point. So here we're at 1.5 R, which seems like a nice target right up here. This was the swing high in the higher time frame. This is what I like looking at too. If I look at the 15-minute, this is the swing high that initiated this whole down move, if we were correct. So you'd think if this was the swing high, that initially is down move, if this thing is going to go up, it's going to at least take out this high before it wants to go lower. So I think that's a really good target. 1.49 seems reasonable. So I'm going to go ahead and place a market order. And get stopped out, I guess. Wow. Frustrating. I think this is a lot of part where people just quit and say, this strategy doesn't work. I back tested it for, what is this, like 2 weeks? Done about 10 trades, right? 2, 3, 4, 5, 6, 7. Yeah, about 2 weeks. And then if they would have stuck with it through the whole session, like done the whole 3 months that I have planned, they'll find it works and it's profitable. It's just, you gotta, these are the things that happen in trading where a lot of people fails because they don't have the patience to actually to take losses. And I'm guilty of that too. I'm not saying I'm special, but I'm just saying, like, I realized that through backtesting. It's the only way I realized that. So that's the new week opening gap. So now we have 2 of them. Wish I could play music, guys, but I get copyright strikes, so sorry if you listen to nothing. But I'm listening to some music in the background. I got headphones on. All right, so now we're waiting for a swing high to form. So I have a swing high form. Gets taken out. Rules say first swing high to get taken, or swing low to get taken out. We're going to aim for opposing side, which makes sense in this case. I mean, you had to look at this crazy buildup. I think this thing's not going to keep going up. And the swing low that formed the swing high gets swept, so that's a change of character. And we have a fair value gap. So in this case, we could enter short here. Stop below the highs, targeting opposing liquidity. This is a 3 to 4. I don't want a market order here. I want to see about placing limit order. There's also a fair value gap here. So in this case, it doesn't affect my RR too much. So in this case, I'm going to cancel that and place a market order. I think I need to recreate that fuck. This could be a completely trending day. And I could take 2 losing trades again. But that's, you know, just following the strategy verbatim. And stopped out. Okay. So let's see if we have another market structure shift. Are we aiming for some opposing liquidity? There's some up here. So this is why, like, I have to zoom out. I don't know how this strategy is going to work if you don't zoom out. That crazy price run. Is it 11 o'clock yet? No, just that's insane. How do you trade that? Wow. How does this play out? Just want to play it till 3. It's 3 o'clock. You see some crazy action too. I think it's just a continuously trending day. I'd look for probably any longs. So we get the 3 o'clock. 231, a low put in, 239, 250, a sweep liquidity. It's exactly when this 3 o'clock algo sweeps in. So I would think that we'll see a really big price run. Oh, maybe we get the opposite. Now we get another sweep after 3. Okay, so after 3 o'clock we get a sweep. Get a nice little price run till the close. Okay, interesting. This one here. And if you studied ICT and new week opening gaps, you know there's such a thing called an event horizon. That's another thing I like adding to my analysis, is that the midpoint between these two new week opening gaps is considered the event horizon. And if price closes in the higher time frames, let's say 15-minute or 5-minute above, you can consider that it's going to reach higher. And right now, into the end of the session, it reached into this buy side liquidity, and it could reach. It usually reaches into this new week order gap. You can count on that happening in this price run somehow or another. So if you get a good entry somewhere there, you can consider the risk to reward. Let's see if that does indeed happen. It doesn't break the kind of as a new session, but the midpoint was right around here, and you can see it respects it and it goes right. So that's very interesting. Okay, what time we're at? All right, not taking any higher time frame analysis. So here we got 10 o'clock. We got the swing high, equal highs here. Gets taken. Now we're going to be bearish. Yeah, we have a swing low taken. We're going to wait for price to pull back. It does. Let's place an order. Oops. Short order. Targeting these lows seem pretty good. Actually, yeah, these lows seem pretty good. Place order. Ugh, I suck. Let's see. Yeah, I see. Normally I wouldn't take that trade because we have liquidity up here that's resting. So at least wait for that. Just curious, like it's gonna aim for that. It's so close to it. Or at least get closer to it before it. Yeah, so let's hold from 10 to 11 price runners. Yeah, this purge liquidity. It went continued higher. Huh. Pretty bad string of losers here. 1, 2, 3, 4, 5, 6 in a row. Which I back tested before on a 65% win rate. I've had up to eight losers in a row. So you really got to put the time in. Stick with the strategy. All right, so I have a clear swing high here. We have a real broadening range. One thing I found in some other back testing is that if you have that for this particular strategy, is you can wait till 10-10 before taking a trade. That usually helps out as well. Which we're at that point. So we formed a double top. We did not sweep liquidity. Now we swept. Okay, so now we have a bearish bias. we purged liquidity, or we had a change of character here. We tapped into that fair value gap and watch the one where I forgot to make the order. I just forgot to put my order in. Is the one that'll work out. So I'm going to go ahead and go short here, but maybe I'll just do a 1-to-1. Yes, this is because I forgot. So market order in. That's the one that works out, right? Of course. Oh, okay. So that should have been 3.4 to 4. Why? Why me? Oh, getting tired. Man, that would have been something like $1,200. Wait, 3.44. 250 I'm risking times 2. A nice 860. Oh man. Well, not gonna dwell. How are we doing on time? Hour and a half. I think I'm gonna go 2 hours. Okay. We can find some royalty free music. Play that. I think next session I'll do that. I don't want to stop right now to figure that out. All right, another kind of, well, this is kind of supporting long prices, but let's see. Did we purge some liquidity in the higher time frame? Yeah, we did. So all the way back here, we had a bunch of rest liquidity that was short through all this, experienced all this come back on them. If anybody was short here or here, they had their stop up here, just got purged. And there's some volume imbalances and liquidity down here that market will want to take out. So this right off the jump looks like a short that like we might actually miss. This looks pretty aggressive. So we have a right at 10 we have this purge. So let's see if it purges some more and then comes up for us. Well, it didn't purge more, but it came up for us. I mean, it didn't purge more on the downside. It came up and took this high out, which is even like I don't have a bias. I'm not supposed to have a higher time frame bias, but I do for this one. I think it's bearish. We have a low taken out, but it's not the low that formed this sweep of liquidity. So I don't consider that change of character until we get here. However, in this strategy, it says you don't need a change of character. You need a market structure shift. But I just think it's more high probability to have that. So I'm going to go ahead and forego that. Like this. Okay, this would be a great entry. The thing that makes me want to take this and not consider the change of character, equal lows, and this really spiky liquidity rate. So I'm just gonna go ahead and market order short here, but I'm gonna put a stop above. And then a day like this, what is this, a Thursday? Higher win rate, I know that. I'm gonna try 2.75. And yeah, this low looks good. Yeah, what time is that at? 8:30. Yeah, okay. Let's see how this plays out. Oh no. See, this is the way you gotta wait. Okay. So we are gonna wait for change of character. We have to 11 too. Okay, so here we have change of character, and we're gonna place a short order there and target these equal lows. Limit order. Oh man. didn't get filled. Should have been a market order. It's probably will work out. Yeah, it would worked out. But a market order would have been, yeah, still 2.27. That's one thing I haven't traded with really is just market ordering in a change of court character. I know somebody, I think it's Casper Trades or something like that, where he says he'll enter on a stop short and then he'll add if it comes back. So I think it's like, half position and then half position, just so you don't miss stuff like this. I've seen ICT do the same thing on his live streams too, but he doesn't say when he uses the fair value gap entry or when he uses a stop long. He doesn't reveal that really, or yet. He might do it at some point, but he switches it up where I think Casper, I think, I don't know enough about his trading, where he does it all the time where it's half here and half on a pullback. But I can't do that with the backtesting software, so I just wanted to, yeah, just explain that. Okay. I've tried one trade per session before, but I can't, even with backtesting, I can't deal with it. So with 2 trades per session, I can deal with it. So that's another thing I'm testing in this backtesting scenario is I can handle the emotions of just trading twice, but not once. Once is too infrequent for me. It's like I just can't pull myself away from the charts. Maybe I can ease into that situation eventually, but I could do 2. 2 I can do. So that's kind of where I'm at right now. I just got that feeling of like I need to be right and sort of revenge trading type of thing, which I acknowledge, not saying I don't, but I wonder if the swing lows and highs we should be looking for are the 15-minute. That's maybe another session I could do that next time. Rather than these 1-minute swing lows. The people I'm seeing in YouTube are explaining it that way. And like, would you consider this swing high that formed before 10 as well? I'd say yes. Anyway, we clearly purged buy side. So now we're looking for market structure shift to the downside. Trader Zone. Yeah, this is not my system. This is ICT system called Silver Bullet. He sort of explains it in one of his videos. Inner Circle Trader is his name. But then I've seen a lot of YouTube videos where people try to explain it in different ways. So I'm not too sure exactly how it works. However, I have backtested it in NQ and it's had a pretty good win rate. This is the ES. In the beginning of this live stream, I talk about the system in more detail, but so that's why I'm not going to go through it right now. Plus, I'm coming up on an hour and a half, so it's almost 2-hour live stream. I kind of want to put in 2 hours and then call it quits. So the idea, okay, I'll explain it. Like what ICT system is based on the idea that the markets are being manipulated. Okay, I can take that in consideration, but I can't change my strategy midstream in a backtesting session. I have to I have to submit to it for the whole time period that I'm doing this session. And so I'm using FX replay, and what is cool is that I can look at all these strategies and find out what time, all the details about them. And I make little tweaks to them if I find one works versus another. So this is the Silver Bullet for ES. It's done pretty good. It has a low win rate, but a very good R to R. And it's had some very good returns. This is the Silver Bullet for NQ. And if I look at that one, so it's the same strategy, but it's for NQ and I would in these I was considering higher time frame market structure. The one I'm back testing now, I'm just looking at what people have been talking about on YouTube, which is not looking at higher time frame, but just recent price action. No matter if the price is trending up, they could look for a reversal within this time period. And it's supposed to have a 65% win rate. So look at the analytics here. I talked about this in the beginning of the video, but this is after a month of trading. This is actually not trading days, but actual days. I had a pretty low win rate, but almost $9,000, 17% on a $50,000 account. So pretty good. And certain days of the week were better than others, but this was also taking multiple losses per day, not increasing risk, always keeping it 1%, but I have problems with getting to trading days where I give too much back in a day. And so this one was not high performance as far as psychology goes or risk management. As you can see, I don't like equity curves that are so jagged. I like seeing small drawdowns and then small kind of upticks and a consistent trend. But in this case, so I'm not only trading strategy, but I'm trading my psychology in these backtesting sessions. I'm trying to adhere to rules. Sorry, it's a long-winded answer to your comment, but that's just kind of bring me up to speed on what I'm doing here. So I was on this one. It's my third silver bullet backtesting for ES. On other sessions, I've done better. This one was 2 months, about 16%. This is a nice equity curve, right? So this one, very seldom did I trade more than once per day, maybe twice in these scenarios. And I didn't do things like move my stop to break even, which could have helped, I think, a lot more. But this wasn't even 65%, and it was a really nice equity curve. It was just stalled out here because the market was just kind of doing something else. But also what's cool is I look at this and it's like, well, pretty low win rate on Mondays, so maybe avoid Mondays altogether. Same thing for Tuesdays, Wednesdays, and it looked like Thursday was better, Friday was better. So yeah, cool stuff like that. Maybe I can adjust risk on certain days of the week. So let's go back to this. Let me continue. Yeah, you're right. I find that NQ delivers, either it stops you out right away or it delivers right away. So it's also quicker moving, and it just kind of hits it. It likes to stop people out on either side of the market that that people are on very quickly, and it goes to those targets or stops very quickly. And if you're on the right side of the market and it's your target, well, it's other people's stops. There's other people on the other side of the market there. And so I'm trying to say is like, yeah, I think Q definitely delivers differently for sure. And I think I missed this entry. Did I miss this entry? Oh, it's all your fault. Just kidding. No, we had a market structure shift. Okay, so now we're considering entry here. We have a fair value gap. So I consider that an entry, and I target probably these equal lows. Again, because after 10 o'clock, we had the swing high purged. The idea is that there's a macro that runs between 10 and 11 that just on even an uptrending day aims to stop people out that might be long before it truly continues trend. So that's kind of the theory behind this. And whether you believe there's an algorithm that does that kind of stuff, I mean, market makers have their toys, their tools, so it doesn't, I believe it. So that's 1-to-1. I wish I would have got a better entry, but let's just see how that works out. Risking a 0.5%. Oh no, wait, I want a market order. Oops. Place order. Market. Ah, come on, do I have to redraw? Okay, that time it took. Okay. There we go. Boom. Okay. So that one worked out. And you can see this equal lows here are usually a really good target because there's a lot of liquidity there. Retail traders think that this is support. Um, and that's part of ICT's basis is that retail logic, there's a reason why a lot of retail traders fail, um, is that because they use logic that's been fed to them like that through books, and just everybody's following the same logic that this is support. But look, it was support. Why did it tap support and then reverse immediately? It's because market makers and everything, their part of their business model is that they have to pair buyers and sellers. And in order to do that, they need liquidity to do that, right? In order to generate liquidity, they'll move the market up like this, and they will program in equal lows. You know, in nature, there's no straight lines. The market shouldn't be natural. It should be organic. And so this is just a 1 minute example, but if you look at higher time frames and you see the exact same low on a daily level, let's say the higher time frames, and that's a great target because people think it's support. But I mean, what are the odds that exact same to the tick price occurs days apart like that and just reverses? People think it's support because there's a lot of buyers there, but actually that there might be, but the price was delivered to that exact tick because the algorithm figures people will put stops there eventually, and it'd be a great pairing for stop orders with the people that really want to go long, which is institutional buyers, big money. They need that liquidity to go long. So you can consider a move like this, even though we took a short, and I think in an uptrending market, you can see this. This is the 4 hour time frame, definitely bullish, right? So why would you ever take a short here on a when the price is going up? And you know, I'm saying this with one win after all these losses, so maybe that's, you know, take that with a grain of salt. But this is just the idea behind the strategy. And so we purge. I wouldn't be surprised if this price rockets up, especially on a Friday. Which is another kind of algorithm that runs at lunchtime. A lot of people, there's not a lot of liquidity in the market, so it tries generating some. Let's just see what happens in the 15. I don't have patience to wait. But yeah, look at that. So all the smart money was continuously building positions and stopping people out that were trying to go long. And everybody's thinking, especially options holders, that's another thing the market makers are doing, is they have to cover their options contracts by buying stock or shorting stock in whichever scenario. So everybody who's doing, you know, 0 day expiration options on a Friday thinking the market's going to tank because nobody wants to hold into the weekend just got slaughtered, right? And so this is some of the other things like the background plumbing that's happening in the market that you can realize. People need anchor points. Yeah, pivot points work as anchor points, but what I use, you can see there's no indicators here. My anchor points are knowing that there are stops here. People have stop, I mean, there's no doubt that there's stop orders right here, and there's stop orders. Can't copy, can I? Oh, jeez, sorry. Ugh, this is not working. Just want to draw. Stop orders here. Oh, I think it's because of this magnet. Stop orders here, stop orders here, stop orders here. So these are my reference points. All right, there's other reference points too with ICT, but I'm not here to argue any system over the other. I've been studying his teachings, which are completely free, for the last, well, this fall will be a year, but last fall, right? And it's just, it works, but it's a lot to it. There's a lot to understand. It's in no way simple, but you can create simple trading strategies based off of that, if that makes sense. So one of those things is a new week opening gap, and you really can't argue too much with this. These things are drawn from Friday closed to Sunday open, the futures, and you can see how price kind of reacts off of them, right? So ICT explains this as true fair value for big institutional players. They use this to kind of test, the market uses this to kind of test where does institutional players want to take the market, because they're the big money. They're the ones that they're really going to move the market. And they have to pair those institutional orders with, let's say, retail traders by faking them out, stopping them out, pairing liquidity with buyers and sellers. So that's some of the theory behind this. And you can see how price just bounces around here. It doesn't know what to do until it finally breaks. There's other things at fair value gaps that are very interesting. I covered earlier in this, but I'm no way the teacher or master of this. So I defer to ICT and his teachings. But this is Friday and that's Sunday. So we're going to draw a gap between the close and the open. Oops, make this magnet. But yeah, I started off with indicators and everything, and I thought you kind of needed them, but pure price action and some of these ideas of how price has structure built into it and looking at higher time frames and everything, it's served me well. I'm not profitable yet, but a lot of that has to do not with strategy, but psychology, which is my struggling point. No indicator or strategy will fix that. I have to work on myself there. And backtesting's been very beneficial. The thing I like about FX replay is that it's made backtesting fun. Like I have had issues with TradingView. Like I can only do it for a couple hours and I find it only did like a few days because it's kind of clunky. And you can only market order into trades here. You can place limit orders, stop orders. It's got way more data. I mean, I can go back to 1997 on the minute level. So it's like, it's awesome. I found I 10x my back testing with this. And I'm not an affiliate of theirs or get paid any commission to say that. They're the real deal. It's really fun. So we see this break through the new week opening gap and we see this range being put in. So let's go ahead and draw our liquidity. So the swing low would be our first point of interest. And I don't know. Yeah. We'll have to wait for a swing high to form. Okay, so we have a swing high form within the midpoint, which ICT teaches, he calls it the consequent encroachment of this new week opening gap. Great resistance point. So this would be another place where if we saw price come here, we'd want to see a eventual area to short. Yeah, gotta follow the rules. We have some internal after 10 o'clock structure be put in here that's getting purged. So what day are we on? We're on a Monday. Mondays are kind of low probability, but we gotta follow the rules. So in that case, this could be a valid entry. We're heading into the 11 o'clock hour. It hasn't made any real move yet. This could be the move on the short side but we have some relative equal highs here. So let's see what the risk to reward is. So again, relative equal highs are nice. Put a stop here. Target these highs. 2.5, pretty nice. This adjusts my position size automatically. And I was going to do concurrent balance at the beginning, but I forgot. So I'm just going to stick with initial balance. That'll adjust your position sizing. So we get tapped in and boom, 2.5. We dig ourselves out of a pretty big hole there with that one. So that was nice. So do you see that? Like here's some equal lows, it gets purged, right? Stop orders get paired, and then it targets the other equal highs. And even gets this guy here and stops these people out. You gotta think of all the market participants and the uninformed traders. And so look at that, just reverses again. It's just bouncing around, testing out this new week opening gap. I do think it's overall bearish because we had a breakdown here. And the higher time frames, like 5 minute, we're seeing a close below here. And let's see, if I zoom out, we see another new week opening gap. These things are like magnets. So I could see price travel down here, or I don't have any mapped out prior to these 3 weeks. So I don't know prior to this what's going on, but let's see. Okay, well, it didn't really work out there. It's stopped people out. See, there was people thought this was support. It sweeps them and then goes to the upside. So let's fast forward to the next day. I used to trade pivot points with, what do they call it? True Trader. They taught me that. And they, not saying they don't work. It's just like, I didn't find success with them. And I understand some of the logic to them, but this, I can really wrap my mind around why this works. Okay, well, that's good to know. Doesn't help my backtesting. Okay, we have purge of liquidity there. I think a lot of systems work, but they might not work for some personalities too. So like some people are just they have they like can't swing trade, and some strategies don't work for people simply because they can't be in the charts in front of the charts all day. I like this because it's just between 10 and 11. And it's supposedly is not supposed to involve any high time frame analysis. I had to take down a couple other streams I had because I had music on them, and I got a copyright notice, which they were just like DJ mixes, so they shouldn't have any copyright stuff, I thought. But in those sessions, I did really well with the strategy, but I looked at the higher time frame analysis and not the short term swing highs and swing lows. You can't argue with results, right? So we took out intermediate term low here. So in this case, we would be possibly bullish if we could break structure. So we are bullish in this case if we have a target above, which we might not have. Let's go to the daily. Really don't have a target above there. So it could just be trending, which in my market experience hasn't been, I haven't ran into too much of that. So if we are, let's look at the higher time frame in this case. Well, yeah, we do have this high. I'm sorry, we do have this high as a target. It's just not a, it's not a great target. Well, this is internal structure after 10. 10:05. This is internal structure. This will be external structure before 10. So let's use that. This would be the swing low, but we want to see displacement. So we see displacement below the swing low. And we have a small fair value gap there. Another fair value gap up here. Take a short here. Stop here, and then this liquidity looks good. What would this be? Yeah, 1.86 is fine. Let's do limit. Tapped in. think I want to move my stop to break even if it doesn't immediately cash me out after it swing, if it takes out that swing low. So we're there, break even. There we go. Okay. Now we're profitable by $56. So that was good. So we're looking at external structure prior to 10 o'clock being swept, right? And we're not looking to kill it with a bunch of, I mean, this is not bad, 2 to 1. That's what we're looking for. So even though we're in an uptrend day, this thing should be pretty consistent with results. I just found a lot more consistency on the higher time frame. Like looking at higher time frame bias. But in this case, even though we were extended to the upside, even though we had that high time bias, part of ICT's thing is that there's a lot of imbalance here because we have a lot of stops resting here that the market would want to take out before going higher, right? Because they want to pour, they have a bunch of institutional orders that want to get filled, and who's going to start buying if they can't see shorting opportunities? Who are they going to pair with that? Or if they have to stop people out and they have to induce people into going short in order to go up higher. They have to do that. Otherwise, they're going to run out of people to sell or to buy from. Sell to. If you're going to buy, you need sellers, right? Either shorters or people who have stops down below. And that's what they're doing here. It's not market pressure or volume that's doing this, according to ICT. Because you could see price runs where there's like a low volume. You could see that. I mean, low volume days, price still moves. And it's not pressure from one buying side or selling side. You could see that sometimes in the depth of market or in level 2. Sometimes the market moves and it makes no sense as far as how many contracts are being traded. That's part of the reasoning behind the system. A lot of people won't believe that or buy into that, which is fine. You don't have to, but it's something that kind of makes sense to me. I think every system is rigged, honestly. I don't mean to get political or anything, but it seems that life is turning out to be that way. The markets are completely rigged. Just my opinion. Okay, so we got some swing high points here. Nice swing low point here. It's external of the 10 o'clock. So we get that high swept. It's kind of a weak high. It is a swing high. Maybe you want to see a stronger stiff. Okay, so we get that swing high swept. Say that 10 times fast. That swing high swept. Okay, that one swept. Reach higher. Let's look at the hourly. We still have some more liquidity resting up here. And a lot of stop orders down here. So the last swing high I put in, this is the swing low that created. So we want to see structure shift here. And now we want to see a structure shift here. Okay, yeah. Maybe you can at least, if you like that system, that's fine. I mean, maybe you can, hopefully I can, if you watch, help you with backtesting. Like, I think regardless of system I trade, I think I'm pretty good at backtesting, just like scientifically, by finding little tweaks I can make to systems. So that's, I'm definitely gonna live trade on this channel eventually, especially since it's a nice 1 hour pocket, but an hour 20 if you count time before. my trade session, but I first want to get better at it, and maybe not trade live because it adds a lot of pressure. So we do see displacement here, sort of. This looks like displacement, right? I kind of want to see that on the downside before I enter. Although we have this ICT calls it breaker block where we broke the swing high, then we broke the swing low immediately. So I'm going to go ahead and enter short here. Market short, stop here. Are we after 11? No, we can't enter. Okay. Good thing I caught that. I almost took that order. Curious to see if it works out. Oh, yeah. Maybe it would have. What would have been my trade? I was here, right? I mean, my stop, I'm always like 1.5 more R. So that's 1.67. I might have taken that. There's equal lows, right? I don't want to lie and say I would, but let's just, for the sake of argument, say that would have been my target 2R. Sit play. What did it hit? I didn't even take that stop out. I know I probably would have stopped out break even there because at 1.5 R, I've been moving my stop to break even. Okay, so get all that resistance, right? Just broke through. Nice target. Slow. But you got to follow the rules in your back testing. All right, 15-minute, and then what are we on time? Oh, we're over 2 hours. What day is it? Wednesday? Let's go to Friday, and then I'm gonna stop. It's 9:30 here in Dallas. And we'll look at the analytics too at the end. Let me show you guys what I observe. This should take like another 2 days, should take about 10 minutes. Okay. All right, so external range. I'm going to count this guy as a major swing point and then this guy. So which one do we take? We take that one. Very obvious. We also have these equal highs. We have this order block up here that we would aim for. So just to show you some of the effectiveness of the strategy or ICT's methods, this could be drawn liquidity here and then a reversal. So we have this high being taken out here. We have fair value gap. So I would go ahead and just market order in here, since our risk to reward is going to be great. Like this could be a target at 2 to be pretty safe. So 1.9 is pretty good. Oh wait, I should make this my stop. That's not so good. Yeah, it's a nice one. All right, man. Oh, doesn't look like it's gonna work out. Stopped out. And eventually works. Sort of. Well, at least that would have moved to break even. We did sweep that. See, we tapped into that order block. That's really, this is the last backtesting session. I noticed this a lot, is that it'll put a fake market structure shift and then tap into this. This happened to me several times within Q, where this order block was tapped into, or an order block was tapped into, and then you look for a structure shift. However, this one did keep no chance. This might be the thing where I talked about earlier in the live stream, is that when do you put a stop market order in on the break of structure, this might be when that happens because I've noticed that there's no chance to enter in a pullback for fair value gap. I mean, there is here, but I generally sometimes miss those. But this type of scenario where you have a stop order right here with the swing low being broken, maybe I just keep my stop tighter because I'm expecting no pullback, you know, like the top of this fair value gap. I'd still have the same target, but at least it would have been break even. Something interesting to observe. Okay. What day is it? Thursday, one more day. And I'll pick up where I left off tomorrow night. And I think this is a 3-month summer 2021 backtesting session. All right, 44. I have a cigar right after this. All right, so we got, I'm going to count these major swing points. The only thing that sucks is sometimes you see like this minor swing point being the sweep liquidity and then just rockets up and creates an opportunity and it was a bullish day, you know, that type of thing. So I gotta figure on that. That's not so obvious. Like that could be it, right? That could be the one that needed to sweep. And this would be the entry. I'm not clear on the silver bullet thing. Sometimes there's no trade opportunity till 11 and then it's okay. Doesn't matter because I don't have. So like this case, nothing. Okay, so don't backtesting. There's no opportunity there. I would like to see how the day plays out though. Go to the 5-minute too. So yeah, trending day during that consolidation. Very strong trend. I'm going to leave it there. Actually, because I'll forget, I'm going to draw the new week opening gap between Friday and Sunday. I think that happened already, right? Sunday. Yeah, somewhere here. Here. Very small one. So to close. Open. Save that. Let's go to the dashboard. We're definitely not profitable. 192. Kind of piss poor equity curve. We crawled out of it, which is nice. This is the thing I like seeing on these equity curves. I mean, right now it's obviously negative, but the problem that you see a lot of people is they put a lot of risk on at this point and then they want to dig themselves out of it really quick. This is nice, right? This I gotta give my pat on the back for. So let's look at the daily. Crap. Look at that, 67% win rate, $42 profit. Crap. And Fridays are nice. Not enough data though, only a month's worth. And that took me 2 hours, but I was doing a lot of explaining and talking during it, so yeah, gives you an idea how long it takes, how much time you got to put into backtesting. All right, that'll wrap it up. Talk to you guys next time. Good luck trading. Have a good one.